We own and operate the best facilities in the best AAA locations, the key coastal science and technology markets on each coast.
And they're clustered. And I was looking at...
Indeed.
When I saw Cambridge, I was going to ask you, you mean Kendall Square or out near Harvard Square? You're talking about Kendall Square, probably,
Kendall
right?
Square,
yeah.
Technology Square, and the Binney Street Corridor, three large campuses surrounding MIT.
So you own the buildings, or do you own is it also part of the centrifuges and the equipment, or just the space?
It's basically the infrastructure and the land.
Yeah.
So we provide the infrastructure so that companies can do make great scientific breakthroughs.
And they do, I guess, because of talent or being close to the university or intellectual, a place to draw these people from. So they congregate together. You must have some out in South San Francisco.
Well, back in 2004, we made a big bet at Mission Bay in San Francisco when no one was there. 2005, we made a big bet on New York City before the industry really came here in a commercial way. And in 2006, made a big bet on Cambridge. And luckily, those bets turned out to be well-placed bets. And today, the best place to recruit and retain great talent.
So when I'm trying to understand your business and what impacts it, I mean, how closely do you mirror biotech stocks, or what measure do you look at to determine whether or not companies are going to be willing to take on space?
Well, demand is generated by the biotech and pharma sector is not so much tied to the general macroeconomic condition. It's really more event-driven. And 50% of our revenues are from investment-grade tenants, so we actually can sleep well at night. Over half of our leases are over 10 years, so we can sleep very well at night as well, and our shareholders. And 80% of our revenues come from these Class A buildings, brand new buildings in these amazing markets. So it's actually a very safe investment. It's kind of an alternative way to play the industry, but in a very safe fashion. And this year, we've given guidance for about 10% earnings growth and a 3% dividend, more or less. So it's pretty good as a stable investment.
So when I read Sam Zell's book and learned a lot about REITs by reading that, yours is really different than the paradigm. And we see, with equity partners that they built space in these great office areas, best buildings, best space. But you do something really different, and you're outside that pack, and you don't really have the vicissitude changes that occur for the rest of the industry.
That's essentially correct. We have very similar super new high-tech buildings, but they have the infrastructure, as you know, to drive laboratories, the infrastructure for the gases, the waters, the air, and floor-to-ceiling heights that allow you to put that infrastructure in. Floor loading capacity, which allows you to put heavy equipment. And so those are buildings that historically investors actually shied away from.
Do you worry about the private sector or the public sector more? I mean, do you need National Science Foundation funding to continue, or is it...
Or NIH funding.
Yeah, people always ask, what keeps you up at night? It's always one word: government. Industry, the factors that drive our demand really are multiple. One is the R&D generated by the private sector, which is about $180 billion a year and has had increases every year. The NIH and other government funding is about $40 billion, and luckily it's been pretty stable. Philanthropy today is about $30 billion into medical research, which years ago didn't really exist, and about another $15 billion of venture. So you have an over $200 billion of R&D per year going into this sector, which really drives space demand.
So would I buy $120 right now? The REIT, or the units, I guess, are they? Yeah,
it's a share.
It's a share. Okay,
yeah.
So but
up about 93% over the last 3 years.
And the yield's almost 3%. So
yes.
you buy it for both yield and appreciation.
Correct, and we've given. REITs have two parts of growth. One is internal growth from existing assets.
Yeah.
Ours this year is predicted to be 6%, which is at the high end of REITs, and external growth to be approaching that, which is also strong.
Excellent.
Plus the dividends, you get a pretty good return.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.